And the expected oil supply glut caused bulls to flee the market, and bets are increasing on U.S. crude prices hit a 16-year low. Oil prices extended their losses from near two-month lows last week. Now, the lack of clarity on a Ukraine ceasefire agreement after Putin and Trump's meeting in Alaska also kept a lid on oil bets. After shedding $1 a barrel, crude oil was trading sideways post the Trump-Putin meeting in Alaska. Even without a deal, forecasts for a supply glut outweighed concerns that sanctions on Russia will curtail global supplies. But for now, investors appear little concerned that the lack of clarity from the summit would result in further restrictions on the Soviet nation's crude flows. The latest data from the Commodity Futures Trading Commission showed that bets in favor of crude fell to the lowest since 2009. Strategists at TD Securities said that oil markets have returned to discounting sanction risks, with barrels thus far remaining undisputed. The strategists added that now weak fundamentals in the coming months suggest that the floor for crude prices is still lower should the demand side show any sign of weakness. Separately, Trump said that he did not immediately need to consider retaliatory tariffs on countries such as China for buying Russian oil, but he said that he might have to in 2 or 3 weeks. Just last week, Trump threatened sanctions on Moscow and secondary sanctions on countries that buy its oil if no moves are made to end the war in Ukraine. China and India are the top 2 buyers of Russian oil. However, both countries have criticized Trump's tariff rhetoric and stood their ground on oil purchases from Russia.